Do the wealthy actually invest in silver? Silver, the metal that almost nobody talks about, but the one that the quietly wealthy never stop watching. And I want you to think about something before we even get started. You've heard about gold, you've heard about stocks, you've heard about real estate, but silver? Silver gets maybe 10 seconds of airtime before the conversation moves on. And that silence, that collective disinterest, might be one of the most expensive oversights in personal finance today. So here's what I want to know, and I want you to be honest with yourself. Have you ever seriously considered silver as part of your financial future? Or has it always felt like the lesser version of gold, the cheap alternative, the thing you buy when you can't afford the real thing? Because if that's how you've thought about it, you're not alone. And you're also missing something that a very specific group of wealthy, strategic investors has understood for a very long time. Stay with me through this entire video, because what I'm going to share with you in the next few minutes is not what you'll find in a typical finance article. This goes deeper, and by the end, you're going to see silver in a completely different light. Let's start with something that will reframe everything. Silver is not just a precious metal, it is an industrial metal, and that distinction is what makes it unlike almost anything else you can invest in. Gold is primarily held as a store of value. Central banks hold it, governments hold it, wealthy families hold it. About 90% of all gold ever mined still exists above ground in some form because people keep it, they don't use it up. Silver is different. About 50 to 60% of silver demand every single year comes from industrial use, electronics, solar panels, electric vehicles, medical equipment, water purification, military technology. Every smartphone on Earth contains silver. Every electric vehicle contains silver. Every solar panel generating clean energy right now contains silver. And unlike gold, once silver is used in an industrial process, most of it is gone forever. It's consumed. It disappears into the products we use every day. Think about what that means for a moment. We are living through the greatest industrial transformation in human history. The shift to clean energy, the electrification of everything, the explosion of technology in every corner of our lives, and silver is at the center of almost all of it. So the question isn't just whether silver holds value the way gold does. The question is whether the world's growing demand for silver, driven by industries that literally cannot function without it, is going to push prices higher over time. And when you frame it that way, the conversation changes completely. But here's where it gets really interesting, and this is the part that most people never hear: the gold to silver ratio. Right now, it takes roughly 80 to 90 ounces of silver to buy 1 ounce of gold. That ratio has historically averaged around 50 to 60, which means by historical standards, silver is significantly undervalued relative to gold right now. Wealthy investors who understand this ratio watch it obsessively, because when that ratio is high, silver is cheap relative to gold. And when it compresses back toward the historical average, silver tends to outperform gold dramatically. In 2011, when silver ran from around $18 an ounce to nearly $50 in just a few months, it was largely because the gold to silver ratio was compressing. Investors who understood what was happening made extraordinary returns. Investors who had never heard of the ratio watched from the sidelines and wondered what they had missed.
But wait, before you get too excited, I need to tell you something that most silver enthusiasts conveniently leave out. Silver is volatile, extremely volatile. More volatile than gold, more volatile than most commodities. In 2011, silver went from nearly $50 an ounce all the way back down to under $15 within a few years. That is a 70% drop. People who bought at the peak and held through that decline watched most of their investment evaporate. So when I tell you that wealthy investors understand silver, I don't mean they throw money at it recklessly. I mean they approach it with a specific strategy and a specific mindset. And that strategy is what I want to walk you through right now. The first thing wealthy investors understand about silver is that position sizing matters more than timing. Nobody can predict when silver is going to run. Not you, not me, not the most sophisticated hedge fund on Wall Street. But what you can control is how much of your portfolio you allocate to it. Most sophisticated investors who hold silver keep their allocation somewhere between 2 and 8% of their total investable assets. enough to matter when silver moves, not so much that a major correction destroys their overall portfolio. That discipline, knowing not just what to buy but how much to hold, is the difference between investing and gambling. And most retail investors who lose money in silver lose it because they over-allocate based on excitement and then panic sell during the inevitable pullbacks. The second thing wealthy investors understand is that how you hold silver matters as much as whether you hold it. Physical silver, actual coins and bars you can hold in your hand, is the most direct form of ownership. It has no counterparty risk, it can't be hacked, it can't default. If the financial system experiences a serious disruption, physical silver is yours completely. But physical silver also has drawbacks. It takes up space, it costs money to store securely, it can be difficult to sell quickly in large quantities, and it doesn't generate any income while you hold it. Silver ETFs solve some of those problems. They give you price exposure to silver without the logistical headache of storing it yourself. They're liquid, they're easy to buy and sell, but they do carry counterparty risk, and some investors are uncomfortable not owning the physical metal directly. Silver mining stocks offer a different kind of exposure. When silver prices rise, well-run mining companies can become dramatically profitable because their costs are relatively fixed while their revenue goes up with the price of silver. This is called operational leverage, and it means mining stocks can significantly outperform silver itself during a bull market. But mining stocks also carry company-specific risks, management decisions, geopolitical risk in the countries where they operate, environmental regulations, operational failures, so they're a more aggressive bet on the silver thesis than simply owning the metal. Most sophisticated investors who want silver exposure use some combination of all three: physical for the insurance, ETFs for liquidity, mining stocks for leverage when they want it. Now here's the insight I promised you, the one that's worth more than anything else in this video. The reason most people fail with silver is not because silver is a bad investment. It's because they approach it with the wrong mindset entirely. They buy silver because they're scared, because they saw a headline about inflation or a collapsing dollar or an economic crisis. They buy in a moment of fear, often near the top of a price run when fear is at its highest, and then when prices pull back, they sell in panic, locking in losses. This is the retail investor cycle, and it repeats itself with silver, with gold, with every volatile asset, over and over and over again. Wealthy investors do the opposite. They make decisions about silver during calm periods, when prices are not exciting, when nobody is talking about it, when the headlines have moved on to something else. They build their positions slowly and deliberately, and then when the excitement comes, when prices start running and everyone starts paying attention, they're already positioned. They're the ones selling to the people who are just discovering the trade.
That's the real secret. Not some advanced technical analysis, not insider information, just patience, discipline, and the willingness to be early when nobody else is paying attention. Let me ask you something directly. Are you the kind of person who buys things when they're exciting and everyone is talking about them? Or are you the kind of person who does the research quietly, builds a position before the crowd arrives, and then waits? Because that single behavioral difference, more than any specific asset you choose, is what determines your long-term financial outcome. The wealthy are not smarter than you. They don't have access to information you can't get. What they have is a framework for making decisions that removes emotion from the equation. A framework that says, I understand this asset. I know why I own it, I know how much I should hold, and I'm not going to let fear or excitement change that plan. Silver, understood and approached correctly, can absolutely be part of that framework. It's a dual-natured asset that offers both the store of value properties of a precious metal and the demand-driven growth potential of an industrial commodity. That combination is genuinely rare in the investing world. And as the global transition to clean energy accelerates, the industrial demand side of that equation is only going to grow. The International Energy Agency has projected that solar power alone could drive silver demand to levels the market has never seen before over the next decade. Electric vehicle production is scaling at a pace that most people haven't fully processed, and the global supply of silver is not growing fast enough to easily meet that demand. That's not a guarantee of price appreciation. Markets are complex. Supply can increase, demand can shift, technology can change. Nothing is certain. But as a long-term thesis for a small, deliberate portion of a well-diversified portfolio, silver has a stronger fundamental case today than it has had in a very long time. And the people who understand that, the ones quietly building positions right now while silver sits below its all-time high and most investors are focused elsewhere, they might just be the ones we're talking about in 10 years, the same way we talk about the people who bought gold in the early 2000s before it ran from $250 an ounce to nearly $2,000.
The question is whether you're going to be part of that group, or whether you're going to find out about it after it's already happened. That choice, as always, is yours. So here's what I want you to do right now. Drop a comment below and tell me honestly, have you ever invested in silver? And if you have, was it a strategic decision or an emotional one? Did you make money or did you get caught in one of those volatile swings? I want to hear your real experience because the comments on this channel are one of the most valuable resources we have. Real people sharing real financial experiences, and that kind of honesty helps everyone who's watching. And if this video gave you a new way of thinking about silver, about how the wealthy approach it versus how most people approach it, then do me a favor and hit that subscribe button. Because every week I break down these kinds of insights in plain language so you can start applying them to your own financial life. You don't need to be rich to think like the wealthy. You just need the right information and the discipline to act on it. And today, you got both.